All right, what up, everybody? This is Jeremy with the Market Update Bias Report for Sunday, October 5th. Overall, gold and silver and other safety plays are continuing to dominate the market, even though the broader indexes are still just in a slow grind higher. Let's break it down, starting with the SPY index here. If we zoom in on SPY, you can see we are just continuing this soft grind higher, not any really big major moves, but we are continuing to grind higher and set all-time highs on the daily time frame. You'll notice two diagonal lines I've put here on the chart, and if I zoom back out, you can see that really going back all the way to the middle of May, we have really respected this kind of diagonal zone as support. Every time we've come down into that support zone, we've bounced and it's been off to the races again. But it is really interesting to me to note, if we zoom back in here, that we are starting to see our RSI roll over once again. We've ground up towards the upper part, and on Friday we did have a nice long upper wick. So that signals to me that there is probably more room for consolidation and sideways action right now when I take that wick in combination with where our RSI is, then a big move higher. I'll be kind of surprised to see a large move higher here, mostly because if we look at the heat map, which I will pull up towards the end of our video here today in just a few moments, that it's kind of a mixed bag week over week with where money is rotating. It doesn't really seem like there is a lot of money coming into the market. It is just moving around within the market. So on the S&P, honestly, I see this as most likely sticking in a range here, probably up to around 675 and then down probably to around 655, staying within that like 20-point range right here for this next week. If we do break below and close below these two diagonal lines, that is going to be the first checkbox for me that this bullish run might be coming to a close. And then the final one is going to be if we cross below the 50-period SMA here, which is currently at 647.95. Let's just call that 648. So if we get below 648 and we close below that level, that to me is going to be the next time that I start to look to add bearish positions to my overall portfolio. Until then, I am just managing opening positions and continuing to sell covered calls on any of my long-term positions. Now, if we go out to the triple Q, clear off our drawings and take a fresh look at this, you can see going back to mid-May, pretty much the exact same analysis with a very clear diagonal support zone here. Continuing to grind higher on Friday, however, we didn't just have the upper wick, we actually sold down a little bit and had a little bit more aggressive rollover on the RSI. So I am expecting, just given these two charts so far, more consolidation with maybe a slight bearish lean this week. If we go out to IWM, pretty similar chart here, at least for the last week or so. Couple of different wick attempts trying to break out of this zone, setting a new high for the 6-month chart. But we did have a diagonal support here that got broken. And if I extend this out to the right, you can see we broke below that line and this wick came up and tested it almost to the penny on the top side and has now failed to break above this horizontal support from the previous wick as well. It didn't have the power to sustain that move. So if we do reclaim both of those zones throughout this week, I might be tempted to play IWM to the top side, but I do think that we are looking at a potential fake out here and probably more consolidation and sideways action, if not maybe a pullback back down into like the 235, 236 area for support. Now going out to the Dow Jones and IWM look almost identical to me. Both have those big upper wicks. This one we did technically close above the prior wick, so a little bit more strength in the Dow Jones sector versus the IWM ETF there. But yeah, again, looking at the overall chart and even putting this out to a weekly time frame chart, we've just had this slow grind higher 1 week at a time, but we haven't really built much momentum ever since we broke out of our previous highs from back in December. So to me, it looks like this move is exhausted and we really do need a pullback here before I'm going to get too interested on the top side of the market. Now, going out to Bitcoin, Bitcoin had a great week last week, breaking out of a fairly significant consolidation pattern here that has lasted a couple of months. If we drop this back to the daily chart and look, we ended up having a really nice little double bottom form right here around $61. And we have now set an all-time high on this Bitcoin ETF. IBIT is the one that I track for escape velocity trading, but I also use BitX, which I'll show you right here, which lags a little bit because this is a 2x leverage Bitcoin ETF. So it lags a little bit initially when momentum starts to come in, but then outperforms with momentum if the momentum sustains. So it's a little trickier to trade this one, which is why I don't usually pull it up. But it is interesting to me to see this momentum coming off that same double bottom pattern. And I am expecting us to set a new all-time high on BitX as well coming into this week. Now, moving out to gold. As I said at the beginning of this video, gold and silver and other safety plays have really been outperforming the market over the last month or so. Just looking at this movement, we've gained 16.8% in the last month and a half, versus if we go out to the SPY and look at that over the same time frame, it's up less than half of that. So it's interesting to me to see a lot of bids for safety coming into the market right now. And that is probably in large part to where the dollar is. But let's check in on silver really quick before we get to the conversation around the dollar. So going out to silver looks pretty much identical to gold. I do think we need to take a breather here because we are really overextended on both gold and silver. But honestly, if we put this out to a max time frame chart, the all-time high on silver going back out to April of 2011 was $48.35. And I have a feeling we are going to tap that number before we get a really vicious pullback in silver. So I'm kind of eyeing that $48 mark for taking profits on silver currently. Now, let's go out and talk about the US dollar really quick, because this kind of explains a little bit of why gold and silver have been doing so well. The first thing to know is most commodities globally are generally priced, in US dollars. And basically what that means is when we have a weak US dollar like we've had recently, if I put this out on a longer time frame chart, you can see over the last 3 years, this is the lowest the US dollar has been for several years. Now, when the US dollar is weak domestically, that means that it takes more purchasing power, more money to buy the same amount of that commodity, which drives prices up for those commodities. Now, at the same time, foreignly out in other countries, a lower US dollar means that it is actually cheaper for them to stockpile and buy those same commodities, which also increases demand for it. And then finally, we have commodities like gold and silver, which are typically viewed as hedges to inflation. And we are in an inflationary environment right now. So we have all three of these things lining up together that are simultaneously causing gold and silver to do what they have been doing. Now, we are at a really interesting inflection point with the US dollar. So if we start to see the US dollar increase, that means that it is going to probably weaken gold and silver, even though we are still going to be looking at it as an inflationary hedge for the short term. It is going to weaken the arguments for both domestic and foreign purchasing based on the commodities being priced in the US dollar. So I am watching this very, very carefully right now and looking at this daily chart, really basically looking for it to take out this high right here. If we take out that high, I do think that it is going to end up leading to gold and silver taking a significant breather. And that is going to be when I start to really focus more on selling covered calls and locking down my risk graph on those assets. Now, finally, to wrap up, let's go out to our heat map. This is a 1 week performance in percentage basis points for some of the major companies in the S&P 500 over the last week. And you can see really a mixed bag. We have some areas that are showing significant strength, like NVIDIA and other chip makers. We have other areas like communication services and entertainment that just took it on the chin this week. The one thing looking at this picture that really stands out to me is healthcare. Healthcare has been going on a tear recently, and this is due to news based on potentially lowering prescription drug costs that the Trump administration has been working on. And they have kind of been strong-armed a little bit by the Trump administration for Pfizer and Johnson Johnson, Merck and Co. All of these different pharmaceutical companies have been coming to the table and trying to make deals with the Trump administration. So we've been seeing a lot of news in the healthcare sector that has been driving that price action. Now, finally, going out last but not least to our economic data, we have to take this with a grain of salt because you can see at the very top of the screen here, we have a little warning that is basically saying because of the US government shutdown right now, all of these economic reports and stuff are fairly tentative, may or may not actually be released on schedule because of that government shutdown. So we are going to be waiting and seeing if these actually occur or not, but it's still important to have them on your schedule. And you can see the ones that might be impacted by the government shutdown are marked with tentative instead of giving us an actual time frame on it. But with that, we have nothing Monday and Tuesday. This is all stacked Wednesday through Friday. And really, the only ones that are impacted on Thursday is going to be unemployment claims. And then Friday, most of the economic data on Friday is going to be impacted. So from Thursday on this week, keep an eye on this and refresh your page occasionally to make sure that you are on top of when and if these are going to be released. So with that, guys, as always, trade safe. Let me know if you have any questions. Hit me up in the comments. I'd really like a like and subscribe if this is helpful to you, and I will catch you soon.